At the time of recording, Solid Power is trading around $4 and change per share, a level that reflects both skepticism and opportunity. Price action over the past few weeks has been non-linear, with the stock briefly pushing above the mid-$5 range earlier this month before cooling off. That kind of movement isn't random. It usually signals a market trying to recalibrate expectations around a company that sits at the intersection of breakthrough, technology, and long execution timelines. Solid Power operates in one of the most strategically important corners of the energy transition. Solid-state batteries, unlike conventional lithium-ion cells that rely on liquid electrolytes, Solid Power's approach replaces that liquid with a sulfide-based solid material. This matters because the electrolyte is the bottleneck. Remove the liquid, and in theory, you unlock higher energy density, improved safety, faster charging, and better long-term stability. Those are not marginal gains. Those are characteristics that could materially reshape electric vehicle design and cost structures over the next decade. What separates Solid Power from many early-stage battery companies is not just the chemistry, but the way it has positioned itself commercially. Over the past year, the company has moved beyond laboratory validation and into structured industrial collaboration. The most significant recent development is a joint evaluation agreement involving Samsung SDI and BMW. This is not a marketing partnership. It is a defined plan to integrate Solid Power's solid electrolyte into Samsung-produced cells for testing in a BMW demonstration vehicle. For sophisticated investors, that distinction matters. Demonstration vehicles are where theoretical performance meets real-world constraints. At the same time, Solid Power has continued advancing its manufacturing roadmap. Site acceptance testing for the SK-On pilot line was completed and served as the primary revenue contributor during the most recent quarter. That detail is important because it shows revenue tied directly to execution milestones rather than speculative licensing. In parallel, the company is progressing toward a continuous electrolyte production pilot line. With commissioning targeted for 2026, this step is critical. Electrolyte scalability, not just cell performance, will determine whether this technology can transition from validation to commercialization. From a balance sheet perspective, Solid Power remains unusually well capitalized for a company at this stage. As of the most recent quarter, total liquidity stood at just over $300 million. That cash position significantly extends the company's operational runway and reduces near-term financing risk. In a sector where capital intensity is high and development timelines are long, liquidity is not a footnote. It is a strategic asset. It allows management to iterate, test, and refine without being forced into unfavorable funding decisions. This is also where valuation context becomes important. At current levels, the stock reflects a meaningful risk-adjusted discount to its long-term total addressable market. That discount exists for a good reason. Solid-state batteries remain one of the most technically challenging transitions in energy storage. Manufacturing consistency, yield optimization, and cost reduction are unresolved hurdles across the entire sector. Investors are not paying for certainty here. They are paying for optionality. Around this point, it's worth pausing for perspective. This is not about hype cycles or short-term price spikes. If you prioritize signal over noise in the micro-cap technology space, join us. We track these stories closely so you don't have to. It's also important to acknowledge competitive dynamics. Solid Power is not alone in pursuing solid-state technology. Other companies in the sector, including peers following ceramic-based approaches, are attempting to solve similar problems through different materials and architectures. The market has not yet decided which path will ultimately prove most scalable. That uncertainty is part of the risk profile, but it also reinforces why partnerships with established manufacturers matter more than isolated technical claims. What often gets overlooked in surface-level discussions is Solid Power's strategic choice to focus on electrolyte commercialization first. Instead of racing directly toward full-cell manufacturing, the company is positioning its electrolyte as a potential component within existing battery production ecosystems. If successful, that approach could lower barriers to adoption and accelerate integration timelines. It's a quieter strategy, but potentially a more pragmatic one. That said, execution risk remains substantial. Solid Power is still operating at a loss, and meaningful recurring revenue is not expected in the near term. Development milestones can slip, manufacturing challenges can emerge unexpectedly, and broader market sentiment toward speculative technology stocks can shift quickly. This is not a stock for investors seeking predictability. It is a stock for those who understand asymmetry. At roughly $4 per share, the market is expressing cautious interest rather than conviction. That stance could change as additional data points emerge, particularly around demonstration vehicle performance, pilot line scalability, and electrolyte production economics. Each of those milestones carries the potential to reshape how the market prices future probability. Before continuing, a brief clarification is necessary. This content is for informational purposes only and does not constitute financial advice. Investing in early-stage technology companies involves substantial risk, including the possibility of total loss. Any investment decision should be made based on independent research and individual risk tolerance. Looking ahead, the next 12 to 18 months will be decisive. Investors should expect fewer headlines and more substance. Updates on production efficiency, partner feedback, and capital allocation will matter far more than speculative announcements. If Solid Power can demonstrate consistent progress across those fronts, its valuation framework may begin to shift from optionality toward execution. But it's equally important to recognize that failure to meet expectations would reinforce skepticism. In that scenario, liquidity becomes a defensive tool rather than a growth enabler. This duality is exactly why the stock continues to trade with elevated volatility. The market is weighing long-term potential against near-term uncertainty in real time. Solid Power represents a clear case study in how transformative technologies move through capital markets. Early excitement gives way to realism. Realism demands execution, and execution determines outcomes. There is no shortcut through that sequence. At the time of recording, the stock's valuation reflects neither euphoria nor dismissal. It reflects patience. Whether that patience is rewarded will depend not on promises, but on progress. Too close, this is not a story about a guaranteed winner. It is a story about a company attempting to solve one of the most difficult problems in modern energy storage. Supported by credible partners and a strong balance sheet, yet still facing meaningful technical and commercial hurdles. For investors willing to think in multi-year timelines and assess risk with discipline. Solid Power is a name worth watching closely. As always, this is not financial advice. Markets are unpredictable, and emerging technologies carry inherent uncertainty. The goal here is clarity, not persuasion.